Rana Gupta joining us now. Rana, good to have you with us. So let's get your perspective on the kind of volatility or uncertainty that we've been seeing of late. Are we back on the move now?
Hi, good morning. Yes, the volatility has been too high, and one after another unanticipated events are happening. It was U.S.-Iran tension beginning of the year, then the COVID thing, which is going on right now. However, I think markets have reacted to that. The positioning has come off up. The positioning has corrected a bit. The pricing has corrected a bit. And on the recent bout of uncertainty, our view is that COVID is, it's a pretty serious event, and this will cause supply and demand shocks throughout the impacted areas or even throughout the world. But assuming that it does not break out into any other new geographies, new areas, these shocks will be transitory. So in 3 to 6 month view, I think we do think the economic data could be still quite poor from here to next 3 months. That said, one has to say that companies with strong balance sheets will be able to ride this through. And overall, now the supports have come in. We have already seen globally central banks cutting rates, so that's at least provide some sort of support. To revive growth, we would need some sort of fiscal help. That is also coming in certain other countries. We have seen talk about that is taking place in many other countries. And last but not the least, of course, to eradicate this fear totally, there's some health solution is to be found. So I think our prognosis is that the support is already here. The bulk of the crisis has happened, and going forward, we in a 12-month view, probably the things could be better.
Okay, but that 12 months is a long time, Rana. So what would you advise in terms of investments currently? Between equities, bonds, or other safe haven assets, how would you look at going about things?
So I could talk about the equities as an asset class more. I think if one is looking at the data points coming through from here to next 3 months, I think that data point can still be quite volatile because this disruption has just happened, and those are not in the numbers. In fact, people are trying to put forward numbers, that would capture this sort of disruption. But having said that, assuming that this virus is not spread to any new geographies, assuming that, I think one would be more looking at 9 to 12 months out, and any weakness that is caused by in next 3 months due to economic data points could be a good opportunity if someone has a 9 to 12 month kind of perspective, because the summary of what we are saying is that this disruption will not or may not last beyond 3 months. However, the supports put in place, like a favorable monetary policy or somewhat favorable fiscal policy or benign global liquidity, they will last much longer. So therefore creating a pro-risk environment, but maybe you have to wait a few more months before that literally takes hold.
Okay, fair enough. So still seeing some element of volatility ahead. How do you see India performing vis-a-vis some of the other markets at this point, Rana?
Well, I think it all depends on, because in India has also reported a few cases of coronavirus, so it all depends on the trajectory in the very short term, trajectory of infection, because some of the other Asian countries which had suffered initially, now they're coming out with the daily infection rates are falling. So in the very short term, it depends on the infection rates, the noise, and that we get out of this virus thing. But if you take again slightly longer term viewpoint, ultimately it will all come back to earnings, and we do expect that Indian earnings to come back somewhere on H2 of FY21, and led by certain sectors like banks and telecom, and we do think that is quite visible. So again, I think my answer would be similar, that next 3 months quite uncertain, but in a 12-month view, quite good.
Look at what was the difference, say, 1 month back and now? People were ignoring the risk that could come up from this virus, but now people are not ignoring that risk. Even authorities are, giving out strong statements that they are prepared all across the globe. So do you think that news flow from here on may only, incrementally not turn bad?
See, there are two ways to look at it. First of all, because now this virus is taken very seriously. Let's say, if you look at let's say China or Singapore, this example, whenever the authorities took those very seriously, they implemented quarantine measures, they implemented, several other measures. It has economic impact because economic economic activity suffers. People are fearful to go out, but at the same time, maybe there is a 1 month of economic data can weaken because of all this, but this contains the problem of virus, public health, and all that. So therefore, the market, in its own wisdom and rightly in our view, looks past economic data that's going to weaken for the next 1 to 2 months. So to answer to your question, I think because of those measures taken, economic data can weaken for 1 2 months. But after that, it should improve. As far as the markets are concerned, markets markets will consolidate around those 1 2 months time, but beyond that they will look through those data and look for the eventual improvement.
What about the flight to safety for dollar, the way US 10-year yields are? Do you think those assets will gain importance right now?
I think Fed has already cut rates, and I think obviously that the yields have moved much ahead of those cutting rates. But I think if you look at the markets are expecting further rate cuts. So markets are expecting something like let's say about 50 basis points in next 6 months of policy rates. Now, even if you were to add a 50-60 basis spread on that, I think you will get something like a 1.1 or 1.2% or 10 years. So I think the view is there that the rates are going to remain lower for longer. And I think Fed has been very clear in saying even beginning of this year that they are going to tolerate inflation a bit on the higher bound for some time because that is required for a symmetric outlook on inflation. So I think the rates going to remain quite rate environment, liquid environment is going to remain quite supportive.
Thanks so much for joining us.